Hey everyone, me Kevin here. I think we have 30 days left. All right, let's explain what I mean with 30 days left. So first, we've got quite a few bullish things happening in the market. Number one, we just had COVID policies in China finally softened a little bit. Now, they're not officially scrapping COVID zero. They still got COVID zero. No. Nobody get confused with thinking China's scrapping COVID zero. No, they are refining it. They're substantially reducing. They've got a 20-point playbook. Okay, I'm just going to give you some examples. Reduced wait times, less testing is the general theme. They're reducing the isolation policies. Instead of a 10-day quarantine, it's 5 plus 3 at home. They're reducing how many people are affected by it, the close contact rule. And this is expected to really be a boon for airlines and travel to and from China. And so even though that still sounds relatively extreme, because it kind of is, cases are rising in China, and they're loosening policies. Well, in certain areas, cases are rising quite a bit. And if you throw up a chart and you kind of compare cases, you're like, really? With that kind of average rise, y'all are loosening policies? I think it's because they finally realize if they get rid of COVID zero, their GDP will pop up like another 2%, which I realize doesn't sound like a lot, but when you're talking in terms of GDP, it's a big deal. Like, China's growth could be 2% next year, or it could be 4% next year, and it all comes down to COVID zero. But that's not the only thing that's exciting markets right now. Obviously, the inflation report that we had yesterday was phenomenal. People are calling this the pivot, the inflation pivot, not to be confused with the Fed pivot. They're saying this is the big turning point. The bond market rallied, yields dropped like crazy, and I think most importantly, bond break-evens. So the 5-year break-even rate finally fell again. This was really important because it started rising, and the Fed is crystal clear that the last thing they can allow to happen is inflation expectations rising or essentially de-anchoring, because they believe that if inflation expectations anchor high or rise, then it actually becomes significantly more challenging to fight inflation, because if people expect higher inflation, then they'll buy more today rather than next year, because they'll think that prices are going to be higher next year, so you may as well buy this year. This mostly doesn't apply to, obviously, like you buying cereal or bread. This has a lot to do with, are you going to buy a plane for your company? Well, you might delay that to next year when you think prices are going to be lower if your expectations are prices are going to come down. Business equipment, whatever. That sort of reduction in spending times the velocity of money actually slows the economy quite substantially. Now, those are both good news items. You do still have companies like Bank of America, though, saying, hey, don't get too excited. Big tech and growth companies are still going through a big derating, and we expect that derating to continue. They're saying this derating is expected to continue because service and wage inflation is still high. And yes, this is true. Service and wage inflation is still high. And this is where I think it's really important to look for companies that we actually think can grow earnings per share. Now, I don't think the market has actually properly evaluated that sort of difference yet. And I think that's one of the reasons, in addition to obviously the Twitter drama, that you're seeing Tesla suffer as badly as it is. But if you are a Tesla investor and you're scratching your head going, what the hell? This is supposed to be like a recession-resilient stock. I think what's happening is you've kind of got a massive sell everything attitude going on. Last week at Bank of America alone, I don't have the statistic here, Bank of America alone, not only did they have net outflows of $4.6 billion, but they basically suggested retail capitulation was happening before the CPI report. Money was flowing into bonds and cash. And really, what's going to happen, in my opinion, I know I'm a licensed financial advisor. I know I've got some amazing courses linked down below with some great perspective, Black Friday coupon code as well. But just my opinion, I believe that what happens is, we go through this tech rating, derating, which we've actually already seen much of, I feel, and you're going to see companies that can actually still grow EPS stand out with their forward returns above the rest. Now, that doesn't mean the entire market's not going to move up. You're going to see rising tide lifts all ships, right? If we have a rally for the next 30 days, rising tide lifts all ships. But the question is going to be, what are those returns going to look like over the next year? Well, I believe those returns are heavily going to be centric on, or heavily going to benefit companies whose earnings per share is growing substantially more than others. So, for example, if you have Amazon EPS flat, just as an example, that doesn't mean it's not going to go from 100 to 150. But if you have their EPS flat, and then let's say Tesla's EPS is growing at 40, 50%, I would expect an outsized return, let's just say. So, again, could be totally wrong. And it doesn't just have to be Tesla, right? Look at companies that are growing earnings per share like crazy. And also remember that Goldman predicts that the bottom of the stock market actually tends to come 6 to 9 months before the bottom of EPS. So you want to keep that in mind as well. So EPS growth companies, there are a lot of them. You really want to look for companies that have pricing power, which has gotten really challenged. A lot of advertising companies just don't have as much pricing power as they used to, but they still have some pricing power. I think, for example, Netflix and Disney going to a subscription ad model, subscription and ad model, like cheaper, is kind of a sign of a lack of some degree of pricing power, right? And you've got uncertain systems in terms of like, hey, are those advertisements actually going to turn any kind of profits for these companies? We'll see. I mean, certainly you would expect more income than zero, but is it enough to actually make sense? I mean, yesterday you had Amazon talk about potentially cutting Amazon Alexa because it's costing them billions of dollars, and the world just hasn't moved to voice, despite how many times Gary Vee over the last 3 years has said everything's going to voice. It's either just not actually moving to voice, or, I mean, personally, I still find voice relatively frustrating. It's difficult to fully get it to understand me. I can type faster than I can get Siri to understand what I'm saying, which I feel like is kind of ridiculous, but sometimes I feel like Siri was better 10 years ago, when it was actually maybe it was a little more than 10 years ago. Did you know Siri used to be a separate company? It was actually bought by Apple. It was an app in the App Store, I want to say in like 2008 or 2009. I used to have it. It was an app called Siri. Apple bought it, and it became part of Apple. Anyway, so look for companies with EPS growth, substantial growth. I actually think Apple does have pricing power, even though their iPhone shipments are being delayed because of COVID in China. I think they still have substantial pricing power. That's another one. You've got, obviously, Enphase, huge pricing power. And look, if rates do meaningfully plummet, and then we actually need to prepare with House Hack, because the real estate market, as fun as it is to talk it down, because obviously we want to see prices come down, because I sold 85% of my real estate in January and to the April, and I want to go shopping for great deals for investors with House Hack, because I'm putting my reputation on House Hack, which we expect the accredited investor thing will be ready by the end of January, by the way. The non-accredited, that is. Accredited is obviously available now. We got a deadline coming up here on November 30th. But anyway, so go to househack.com to learn more about that and read the solicitation. This video is not a solicitation. But anyway, if rates plummet, we're going to see a floor put under the housing market very, very quickly. And that's going to be a very strong support for residential investment type stocks. See, like, the housing market needs to stay bad probably through the summer of next year for you to actually see a derating of EPS and growth and PE multiples at like a company like Enphase. But otherwise, they're growing like crazy. They're a phenomenal company. It's just if the Fed U-turns and prices come down before the real estate market really has that long of sustained pain that people are like, no, I'm not buying solar panels anymore, and therefore using Enphase inverters and they're micro inverters or batteries. Well, then Enphase could survive very well. So we'll see. We'll see. Everything is dependent on Powell. Now, do also remember, when I say we have 30 days left, it's because you have the CPI, and the next CPI comes out on December 13th. If that comes in bad, all of this excitement instantly probably gets eradicated, because then it's like, oh my gosh, okay, fool me once, shame on you, fool me twice, shame on me. And look, we've been fooled before already. We thought inflation peaked, and then we had a rally, and then it didn't. And then we got Jackson Hole, and then we got Jerome Powell, right? So I just want to leave you with this. Remember that Nikki Leakes from the Wall Street Journal and Jerome Powell both together have made it very clear the Federal Reserve hates stock market rallies. The only good news is that break-evens are falling. That's the only good news. But otherwise, the Fed is like, we probably need to talk this rally down. Otherwise, we risk getting a bad inflation report and undoing all the progress we've made. That's bad. But what's good is that amazing 60% off coupon code down below, Elite Hustlers University, for those of you looking to increase your income. It'll have special live streams, special daily lectures added. That's why there's a subscription component to it. And then, of course, the Zero to Millionaire Real Estate Investing course is getting new lectures, and the Stocks and Psych course is getting new lectures in December. Both of those are getting an update totally for free for existing members and anybody who joins before then. Thank you so much, and folks, we'll see you very soon.